A very good morning, students. Our session of Business Management 3. Now, in our previous session, we already discussed about the demand draft, the withdrawal slip, the demand draft, and different forms of bank. Today, we will discuss about the new topic, that is, or new point, we can say that banker's check. Now let's discuss what is banker's check. A banker's check, similar to a banker's draft, is guaranteed by the bank. Yes, when the bank gives guarantee on the basis of the written document, that will be known as a banker's check. This is a pay order drawn on bank's own fund and signed by a cashier. On the basis of their own fund, the bank is going to draw a check and which is duly signed by the cashier of the bank. Banker's check are mostly used for making real estate payments, brokerage payments, and institutional payments. The beneficiary needs to deposit a banker's check to the bank to receive the mentioned amount of money. The checks are usually cleared one day after the deposit. So the transit period is really very small. It took only one day to clear the amount. A banker's check has certain distinct features. It includes the name of the issuing bank along with its location, pay's name, the amount to be tendered, and a printed signature of the cashier or senior executive officer of the bank. In a simple term, we can say that a check which is given by bank for the payment of a huge amount, that check is known as banker's check. A banker's check also contains some security features such as a watermark, security thread, coloring shifting ink, and a special bond paper. All these features make the check more secure to confirm its items. Some other features of a banker check includes: banker's checks are issued only for the clearing area of the respective bank. It can be cleared in any branch of the same bank and city as it comes under the local jurisdiction. The validity of a banker's check is 3 months from the date of issue. A banker's check cannot dishonor at all unusual. It is a fact. So that's all about banker's check. It is not as much important. It is only a small point that we are going to understand. The next point is a promissory note. It is important as far as your short notes are concerned. Promissory note, it is a written document in which the party is going to promise to make a payment to the another party in the name of the person who is written on the promissory note. And here the bank will become the third party. The bank will get the guarantee that the person is going to pay to the third person after the specific period of time. So it is a kind of formal note. It is a kind of documents, or we can say that it is an instrument through which the payment is possible from one person to another, and in this payment the bank will become the guarantor. Means the bank is going to check the authentication of the creditworthiness of that party. A promissory note is a financial instrument that contains a written promise by one party, the note's issuer or the note maker, to pay another party. To notes payee a definite sum of money, either on demand or at a specified future date. A promissory note typically contains all the terms pertaining to the indebtedness, such as the principal amount, interest rate, maturity date, and place of issuance and issuer's signature. નોર્મલી જ્યારે ક્રેડિટ પરચેઝ ઓર ક્રેડિટ સેલ જ્યાં થાય છે એ ટાઈમમાં પ્રોમિસરી નોટ ઇસ્યુ કરવામાં આવે છે. એન્ડ વિથ ધ હેલ્પ ઓફ પ્રોમિસરી નોટ the third person is going to take the amount from the bank directly. Although financial institutions may issue them, promissory notes are debt instrument that allow companies and individuals to get financing from a source other than a bank. These source can be an individual or a company willing to carry the note under the agreed upon items. In effect, promissory note can enable anyone to be a lender. So, anyone is going to lend the money or anyone is going to receive the money. But the permission of bank is required to create a promissory note. A promissory note is a legal financial tool declared by a party promising another party to pay the debt on a particular day. Generally, the maturity period is maximum of 6 months. It is written agreement signed by drawer with a promissory with a promise to pay the money on a specific date or whenever demanded. This note is a short-term credit tool which is not related to any currency note or bank note. So, it's about the promissory note. Now there are few types of promissory note. Depending upon the kind of promissory loan, notes are of different type. Few are mentioned below. The first one is personal promissory note. This is a particular loan taken from family or friend. Though people avoid legal writings when seeking a loan from close contact, the promissory note shows belief and trust in the interest of the borrower. Commercial, second one. Here, the note is made when dealing with commercial lenders such as banks. Most of the commercial promissory agreement is similar to personal notes. The third one is real estate. This is similar to commercial notes in terms of non-payment consecution. If the borrower become defaulter, then the party has the right to keep the promissory, sorry, the party has a right to keep the property until the debt is cleared. It is a little risky as all the essential details become public, which can hinder the borrower's credit history in the future. And the last one, that is investments. The promissory note is occasionally used to raise fund from the business. It is used as a security purpose and managed by securities laws. It includes terms and conditions related to return of investment. So these are the few types of promissory note. Now let's discuss about ATM. As we already know that ATM, that is automated teller machine. Through ATM we are able to withdraw our cash, we are able to deposit our cash, and through ATM we are able to make the change in our security pin, and in ATM nowadays we are able to print our passbook. So a basic idea is there in your mind that how ATM machines are working. Now let's discuss it in detail. An automated teller machine is an electronic banking outlay that allows customer to complete basic transactions without the aid of a branch representative or teller. In ATM machine we are not going to visit our branch, so we are able to manage our accounts, that is the withdrawal and deposit through ATM. Anyone with a credit card or a debit card can access cash at most ATMs. ATMs are convenient, allowing consumers to perform quick self-service transactions such as deposits, cash withdrawals, bill payment, and transfer between accounts. Fees are commonly charged for cash withdrawals by the bank where the account is located, by the operator of the ATM, or by the both. Some of all these fees can be avoided by using an ATM operated directly by the bank and holds the account. ATMs are known in different parts of the world as automated bank machines or cash machines. Automated teller machines are electronic banking outlets that allows people to complete transactions without going into a branch of their bank. Some are simple cash disbursements, while other allows a variety of transactions such as bank deposits, balance transfer, and bill payment. To keep ATM fees down, use an ATM branded by your own bank as often as possible. As we all know that if we are using another bank's ATM machine, then that particular bank will charge some nominal fee on our transaction. Now there are few advantages of ATM machines. The first one is card reader. There are some basic parts that ATM consists. The first one is card reader. This part reads the chip on the front of the card or the magnetic script on the back of the card. As we already know that if we are supposed to make a transaction, then it is required to enter our card. So there is a window in which we are going to enter the card that is known as card reader. Second one is keypad. The keypad is a place where we are going to enter, we are going to cancel the transactions, we are going to enter the amount or we are going to enter the PIN. So the keypad is used by the customer to input information including personal identification number, the type of transaction required and the amount of the transaction. The third one is cash dispenser. Bills are dispensed through a slot in the machine which is connected to a safe at the bottom of the machine where we are going to collect our cash. Printer. If required, customer can request receipts that are printed here. The receipt records the type of transactions, the amount and the account balance. The last one is screen. The screen where we are going to look the detail of our transaction and the detail of our accounts. The ATM issues prompts that guide the customer through the process of excluding the transaction. Information is also transmitted on the screen, such as account information and balance. Now here is one picture of the ATM machine. Now let's discuss about the advantages of ATM. The first advantages is it allows us to withdraw money. Second, checking how much money is remaining in the account. Balance inquiry is possible. Third one is access to bank from any part of the world. We are able to use ATM from any place where we are. If we are in the same city, if we are in any part of our country, or if we are in any part of our world. Then after, expansion of services to any corner of the world. Yes, we are able to get the pure services of banking at any corner of the world. And last one, that is for the shopping purpose. Yes, now we are able to use our debit card for the payment when we are doing online shopping. Then after the discussion of disadvantages, there are few disadvantages of ATM machine. The first one, if problem with credit card, you cannot withdraw your money. If someone watches or hack on ATM machine, your details may be taken. If you forgot your PIN number, you cannot use the card. So somehow it is very difficult to carry with our ATM cards. Then after, third one is cannot be provided in rural areas. Yes, in rural areas we are not able to get the benefit of our ATM machines. Then after, limitations of cash withdrawal. Yes, it is a limit that we are able to withdraw till, or the withdrawal limit is only 25,000 at a single time. The next one is cash deposit facility is not safe. Somehow or sometimes there are problems with the deposit of cash. The cash is going to be deposited, but it is not there in our account for more than 2 to 3 days. So it is not at all safe. The next one is possibility of misusing ATM cards. Yes, through ATM cards the misuse is going to be taken by the person who has a criminal tendency. And last one is lose or loss of personal touch with the bank. Yes, we are going to lose the human touch with the bank, as we are not going to visit our bank if ATM provides maximum facilities through their cards. The next point is the functions of ATM machines. These are really very basic and easy one. I am going to read one by one. The first one is planning of infrastructure and services. So in ATM machines, the first and foremostly bank is going to plan out the infrastructure, means the place where they are going to locate their ATM machines, because it must be in a proper area. So the benefit is going to be used by each and every persons. Second one, relationship with collective transport operators. Yes, it is very necessary to have a good relationship with the local transport operators, because those persons are going to deposit the cash in ATM machines, because every time bank is not going to deposit the cash in ATM machines. Third one, funding of the system by the administrator. Yes, the bank administrator is going to check the funding mechanism, that how they are going to make the funding process in each and every machines of their particular branch. Then after, organization of farers. Farers means the person who is using the transport service. A person who is a traveler is known as farer. So here they are going to make a good organization for those person who is going to travel a lot. The fifth one, that is communication. There must be a proper communication with the persons who are using ATM to their respective bank. Sixth one, future regulatory framework. Yes, in the future if they are going to add some new services, then it must be prior informed to our card user. And the seventh one, that is other mobility related functions. Yes, here we are going to also add the other functions through which we are able to get the maximum services and our customers are using these services in a proper manner. So these are the functions of ATM machines. Now the next point, that is different banking transactions or the different ways through which we are going to transfer money through online process. So let's discuss these transactions, these banking transactions one by one. The first one is RTGS, that is real time gross settlement or real time gross settlement. RTGS means through RTGS we are able to settle our transact money with a limited gross time. So when a fund is going to transfer from one bank to another bank, it is in a real time, means in actual time we are able to transfer our fund from one place to another place, and through which the time period, that time period is known as a real time, and the settlement is known as a gross or a transaction which is settled on one-to-one basis. So in gross settlement, no further explanations or no further delay is going to be there. Now let's discuss it. In RTGS, the fund is going to be transferred, or it is a system where the transfer of money or securities take place from one bank to another bank on a real time and on a gross basis. So if I'm going to transfer my money at 12 a.m., then it directly transferred to another bank with the same time period. So no time gap or no buffer time is there in RTGS. Settlement in a real time means a payment transaction is not subject to any waiting period. So there is no waiting time in RTGS. With transactions being settled as soon as they are proceed, gross settlement means the transaction is settled on a one-to-one basis without bundling on netting with any other transaction. So if I want to transfer 50,000 if I want to transfer 50,000 through RTGS from HDFC to Dena Bank, then it is possible, and at the same time I am able to transfer my money without any other formal process. The RTGS system is primarily meant for a large value transaction. The minimum amount to be remitted through RTGS is 2 lakh and the maximum limit is 10 lakh per day. So we are able to transfer a huge amount at a same time without any hurdles. For online channel, transaction charges for RTGS through online modes are completely nil. And when we are going to make the payment from our branches, and when the physical transfer of money is there, then there are charges that above 2 lakh rupees, 2 to 5 lakhs, they are going to charge 20 rupees plus GST, and from 5 to 10 lakhs they are going to charge 45 rupees plus GST amount. So it is about RTGS. The next one, that is NEFT, that is National Electronic Fund Transfer. Now again it is a system through which you are going to transfer your fund from your bank to any other's bank account. Nowadays, NEFT has become one of the most popular way of transferring funds. Now it is electronic transfer of fund from one bank to another bank. So in this transfer, we are not supposed to visit our branch. It is possible to transfer our money directly through our net banking. Yes, there are few benefits of NEFT that we are going to discuss. Suppose if an individual wishes to transfer a sum of money from his bank account to another person's bank account, he can do so through the process of NEFT. Instead of withdrawing money and then paying it in cash or by writing out a check. Nowadays, at the time of payment, no one is using the check mode or the cash mode. The main benefits offered by NEFT is that it can transfer fund from any account to any branch to any other bank account located at any place. So you are going to transfer your money from any way or from your place to any other place of any other bank's account with a easy process of net banking. The only condition is that both the sender and receiver branches should be NEFT enabled. You can check the list of NEFT enabled bank branches on RBI's website or just call your bank's customer service to confirm the same. Yes, each and every bank must be enabled with NEFT. Then and then we are able to transfer our amount to that account. NEFT system also facilitate the one-way cross-border transaction of funds from India to Nepal under the Indo-Nepal Remittance Facility Scheme. So, across the border we are able to transfer our fund. The next one is IMPS. The name itself suggests immediate payment service in India. IMPS stands for immediate payment service in Indian banking system terminology. It is a money transfer machine it is a money transfer mechanism made available by the apex bank of the country, that is RBI, and National Payment Corporation of India, that is NPCI. Initiated in 2010 by the NPCI and with the help of pilot project with 4 major banks, IMPS has now grown to 150 plus banks. So now it is also a system through which we are able to transfer our money from our bank to any other banks in a proper manner. But there is a limitations that we are able to transfer our money, and the limit is rupees 2 lakh per day. And now IMPS is also available at mobile. So in mobile we are able to make the payment from our account to anyone's account. The next one is UPI. UPI stands for Unified Payment Interface. Now it is a system that powers multiple bank accounts into a single mobile application. In UPI, each and every banks are included. So no further approval of RBI is required to transfer your money from your account to anyone else's account. Merging several banking features, seamless fund routing and merchant payment into one hood. It also caters to the peer-to-peer, means it is on the basis of benefits to benefits. that collect requests which can be scheduled and paid as per requirements and conveniency of the payer. There are few features of UPI that we are going to discuss. Immediate money transfer through mobile device round the clock, that is 24/7 and 365 days. So there is no bank holiday, no Sundays are going to become burdenful when we are going to transfer our money. Single mobile application for accessing different bank accounts. Single click to factor authentication, that is a virtual address of the customer for pull and push providers for incremental security with the customers are not required to enter the details such as card number, account number or IFSC code. So it is very easy one, it is highly secured one. Bill sharing with friends, we are able to share our bill with our friends, we are able to make a payment of the bills of our friends. Best answer to cash on delivery hassles running to an ATM or rendering exact amount. No need to visit ATM. Now through this UPI we are able to transfer our fund. Merchant payment with single application or in-app payment. Utility bill payment is available. We are able to make a payment of our electricity, the telephone, the house tax and so on. We are able to make the payment of donation, or we are able to make the collection or disbursement of scalable. So it's all about UPI. Now the last one, that is USSD, that is unstructured supplementary service data. It is not very known to us, and USSD is not going to be used by each and every customers. Now it is a networking standard used by GSM, that is Global System for Mobile phones to contact or text sending purpose from cell phone to an applicant host by the mobile operator. Now through USSD we are able to make the communication with our network operator. So it is in USSD we are not going to transfer our fund, but there is just a communication between communication with our network operator. Now USSD is used in a wide variety of functions that includes web browsing, prepaid callbacks, location-based contents, mobile chatting and mobile banking, so on. So it's all about USSD. So this is about your different banking transactions. That's all for today. Thank you, girls. Thank you so much.